Budin is here right now with our financial focus. And Steve, a big indicator on just how our economy is doing is about to begin. Explain what's going on here.
First quarter earnings season is about to begin. So now that we've finished 3 months of the year, now a lot of the large publicly traded corporations are going to release earnings. And what I like about these reports is they try to give us some predictions as to how they think the economy is doing going forward. So a lot of information there.
So you're saying, and sometimes this can drive investors a little crazy because sometimes good news can actually wind up being bad news. Explain
That's right.
that.
So this is what drives guys like me crazy is you may have a company, let's say your company says, I'm going to make $1 a share. Right. Well, you may come out and make $1.20 a share. Well, if you beat expectations, your stock's going to go up. If you make $1 a share, but we expected you to make $1.20 a share, the stock potentially goes down. So sometimes you made some money, but if you didn't make enough, the stock goes down.
You're not doing as well as what we thought you should be doing.
That's correct. And you may have it the other way. If you didn't lose as much as we had thought you had expected, then the stock could go up.
Okay. Next item up here is summer travel season is approaching us quickly. Of course, gas prices on everyone's mind. Oil is at, what, $40 a barrel roughly? Yeah,
crossed over $40 the last couple of days. And I bring this one up because a couple of months ago we were down below 30. And in percentage terms, that's over a 30% increase. And we've seen the gas prices trickle up. And I think a lot of this is the fact that a lot of the oil-producing nations are getting together for a conference in the next few days. And the markets are expecting them to come to some sort of production limit agreement. I don't necessarily agree that that'll be the case. These guys can't agree on anything. But I think the market is just a little bit nervous that they could all agree to limit the supply. If they limit the supply with the requisite demand, the prices trickle up a little bit. Wouldn't surprise me to see them go back down.
Before the broadcast, we were just talking about this issue. And so give us the range about the price of gas. What is the normal range here per barrel?
If you go back over history, since the United States has been using oil, let's say 100, 150 years, between $30 and $50 is normally the range. So
really?
The $30 and $20 and even $10 oil we saw years ago and the $130 barrel of oil we saw a few years ago are really the outliers. So right now you're in actually a realistic range. So it wouldn't surprise me if you see it sit here for a while.
All right, real quick, big news in the internet world here. We have a potential merger that maybe a couple years ago people didn't think was possible.
Yeah, Daily Mail is a British conglomerate. They own some newspapers, a lot of gossipy websites. Potentially they're looking to buy Yahoo, which is an American company. They've really fallen off the wagon, like you said. Years ago, they were a pretty big name.
They were the dominant powerhouse.
They were. And nowadays, you know, with Google and Safari, Yahoo really has dropped down. I don't know what kind of value they would have for this purchaser, but maybe this international purchaser is looking to get their feet into the U.S. economy, and Yahoo could be the way to do it.
All right, we shall see. Steve Budin, thanks always for your time and expertise. I appreciate it. All right. Well,